My thing has been, I've been consistently the biggest bull on the street for the last several years. My thing has consistently said that there is more to go, and that because this is a final year of a big bull cycle, we will probably go parabolic at the end. So I think we're entering that parabolic phase now.
Is this the final melt up before the bust? The S&P 500 is at 65.50. Gold is trading at 36.50 an ounce, and no stopping. And are we just going to keep rising, or are we just going to keep seeing rising equity levels, gold prices, and many other things? So where are we in the cycle right now? The markets are rallying. What's the indication? What's your forecast here?
Yeah, I think we are, as I've been saying for a long time, I think we are late in a long cycle, a bull market cycle that started back in 1982. So this is the 43rd year as of August of a bull market cycle that I think is coming to an end. I expect to see, we probably could top out by the end of this year or sooner. But we've got, I raised targets back in April when we had Liberation Day and everybody got bearish. I raised my target to 8,000 on the S&P. From there, in my July investment letter, I raised my target to 8,700 on the S&P, 30,000 on the NASDAQ, 60,000 on the Dow, and the Russell 3,400. So I obviously think there's still a lot to go here, even though I think it's going to happen pretty fast. It is late in the game. We've had a long cycle. The economy is slowing. We may, in fact, already be in recession, but at this point, the evidence is not building to something that says I'm calling for a global bust next year, as you know. But the evidence right now allows most investors to see this as a soft landing, and earnings are still intact. So basically, you've got the best of both worlds: slowing economy, what I think are going to be declining interest rates, and earnings still growing. And that's music to the ears of Wall Street. That will get all the skepticism that's built up on Wall Street. They've fought this market since 2022, all the way up. You're starting to see them begin to say, "Hey, I gotta get more aggressive because this thing has legs."
Yeah, it's like an interesting factor, and I'm not sure we've discussed this before, David, but it's mostly retail that has been driving the markets over the summer to these highs, and institutions were still sitting on the sideline to a degree, just being more cautious. Do you see them piling back in now?
Yeah, I want to caution people. It's not that institutions go all in or all out. They're probably not very much in cash, but they're more defensively positioned. They have been skeptical towards the market. You're right. The retail investor, surprisingly, when we had that swoon back in April, they stayed in the market pretty much, and said this is a buying opportunity. It was the institutions that jumped on the bear market bandwagon and said, "Oh, we're going lower. We're going a lot lower." Strategists across Wall Street were lowering numbers and talking about 4,000 or 3,000 on the S&P. And it was surprising to see the retail investor stay basically on board and bought down there. Like I said, at the very bottom of the sell-off in April, I raised my targets while everybody else was lowering their targets. So, kudos to the retail investor that they this time were the smart money, and it was the institutions that weren't so smart.
Yeah, no, all indications pointed towards a recession at some point as well, of course. So you do want to be a bit more defensive in your investing style, I guess, right? Is that what the institution has been doing? You've been saying they've been more defensive. Like, what were they investing in? Now they're coming back into the tech sector, and where are they allocating now?
Yeah, first of all, I think a lot of their concern is valuations. We're at all-time highs in terms of valuation. And of course, that's led by AI and the Magnificent Seven. Not all of the market is all that highly valued, but they look at valuations and say, "Gee, we're late in this game." My thing has been, I've been consistently the biggest bull on the street for the last several years. My thing has consistently said that there is more to go, and that because this is a final year of a big bull cycle, we will probably go parabolic at the end. So I think we're entering that parabolic phase now, where the institutions positioned, they may be more in some of the more defensive areas. They may be in bonds. They may be other places, and they may have a little cash. But they definitely are understanding now that they've missed a lot and they've got to get more aggressive.
Yeah. Bad news is good news again, David. And, bad news meaning jobs report revisions higher than expected, 911,000, unemployment number ticking up, job openings much lower as well, yet the market is rallying. What do we make of that, the jobs report, and how is that influencing future market decisions, also Fed decisions here, David?
Yeah, we get these, adjustments. They go back and look at the numbers and revise, and we always are surprised. There's pretty sizable adjustment, either up or down, mostly down lately, and it's hard to understand exactly how they can miss by that much. This time around, there is, at least I have some concern that with such a large number, almost 1 million jobs, and it was for 2024, that maybe some games were being played to kind of prop up the economy, make it look better than it was for the election, meaning the Biden administration may have played around a little bit. At least that's a question you have to ask. I don't have any proof, and I don't know. But frankly, yes, what the number means is we have a weaker job situation than we thought. And I've been saying for a long time that this is, the end of the cycle, and that what comes after that is going to be probably worse than 2008-9. So this kind of feeds into my belief that under the surface, things aren't as good as maybe the market would have you believe, or maybe, some of the statistics would have you believe.
What US dollar? We need to talk about the Dixie as well in relationship. It is holding in better than I would expect personally. We're trading around 97.5 on the Dixie. What are your expectations for the dollar? I know you've been calling for a bit lower dollar here in general. Like, are you surprised it's holding in as well as it is?
Not at all. I mean, the dollar's fallen from, basically 110 to 97 in the matter of a year, probably, or less. And I think it's my target is 82. That's far below here. It'll happen in some pretty steep steps. So the first step down in the mid 90s, and then you consolidated here. I think the next step down takes you down through 90, and then the third step down to 82. So I'm not surprised at all. You have to go through consolidations when you have such a big decline. It then goes the other way for a little while. You have to convince some of the people that were jumping on the bandwagon, but not with conviction, that whoops, this thing's going the other way. So I think we've just pretty much gone through that consolidation, and now we're beginning the next leg down, and I think it could happen pretty fast.
Yeah, it's the typical, was it the bear flag, not the bull flag, the bear flag, because we're seeing that stabilizing pattern. Yep. We've seen that in gold, which is a perfect segue, like I've planned it. We've seen it in gold, but to the upside, it was a bull flag. Now we're seeing that bear flag in the dollar. Is that a fair observation here, David?
Absolutely, and I do say gold was in a consolidation from basically April till recently, and it broke out, from 3,300, 3,400, broke out here, and we're at new highs again. I raised my target to 4,000 last year, or not last year, I think a couple letters ago. I'm not going to be surprised if that proves to be low, more conservative. So I'm very bullish gold here. I'm even more bullish silver. Silver's had a great run. It's up. I just did the numbers yesterday. From April to now, gold is up 21%, I think, and silver's up 49%. So it's quietly, people haven't really noticed, but it's quietly outperforming gold as it does in a bull market. So I think silver has a long ways to go. Gold probably has a good ways to go too. So I think the weaker dollar is certainly part of that story. Lower interest rates is certainly part of that story. Global unrest and global uncertainty is certainly part of that story. and the central banks around the world gobbling up gold is certainly a piece of it too. So, and then the final piece, which people always underestimate, is the power of the momentum. You know, it's all of a sudden the institutions are starting to notice gold, even though it's been running for years. You know, because it's got that momentum now, they're starting to say, "Hey, we have to have a piece of gold in our portfolios."